What's up, everybody? Froggy Stocks. Nothing I say is financial advice. Entertainment purposes only. I am not a financial advisor. I've got some good news that came out of data I got from another user on a Twitter Spaces call for Hycroft, baby, and AMC. This is great. I'm loving this. The big news is the options chain. May 1st is today. No Options May has trended across multiple platforms. Reddit, True Social, and Twitter, including YouTube. I'm so happy. The options chain for Hycroft and AMC on the May dates, let's go to May, are so lame. Look at this. Look at the open interest on May 6th expiration and May 13th expiration. All monies. Hardly anything. That is phenomenal. And then I want you to look at this. This is funny. May 20th. Boom. Massive call option open interest. Why? I'll tell you why. It's really interesting. May 20th on the 250, there's 26,704 open interest on calls, 8,000 on 4, 6,000 on 5, and 5,000 on 750. That's not retail. Retail's not coming in and buying these call options on May 20th with nothing on the 13th. And the 6th, this is why. This is why. Failure to delivers. March 31st, 2.36 million FTDs at $2.39 average price with a T plus 35 date of May 5th. Cinco de Moas, baby. This is right before we had the big run on HYMC to that $3. This is wrong on the daily. It was $3.41, right? So March 31st is right here. Let's see. 31st, boom. The big run. March 29th and the 31st, 342, right? That is a run because all these failure to delivers from back during this time and early March were covered. The beginning or the end of February and early March were covered down to only 62 failure to delivers on the chart. That's why we ran. And then look what happened from them. Oh, I'm sorry, not 62. We went up to 13 million and they covered them down back up here on the 25th down to 56,000. That's why we had the big run on the 31st, on the 29th and through the 31st, is because they covered all these millions and millions of failure to delivers down, and we ran. It works with Hycroft because when they cover these failure to delivers, they can't go short the IWM like they do with AMC. When they cover AMC failure to delivers, they short the IWM, so it suppresses the price action. They can't do that with Hycroft. So look at this. They covered them all. 13 million failure to delivers covered. We ran up to $3.41 on the 29th, right? Then coming in past that 341 when we started coming back down, you have all these new failure to delivers pop up on the 31st. And keep in mind, this is the first reporting date that I have access to right now. Next week, we should have the beginning of April FTDs, which I'm thinking these 2.3 million that are due on May 5th, it's probably way more than that due on May 6th, 7th, 8th. I think these FTDs went through the freaking roof for the first part of April. So this is where it matches up with the options chain. Nothing on May 6th, nothing on May 13th, and then May 20th, they've got the call chain, the call options loaded massively. That's because they're going to give it 2 weeks to cover all these new failure to delivers that are probably close well past 2 million, probably close to 10 million again. So 2 weeks, we're going to cover all these failure to delivers for the first and second week of May. The third week of May, the market makers juice the call options chain to try to lure you in. So if we run to $3-4, you're going to get lured into all these call options on May 20th, and then the market maker is going to price fix, create a bunch of new failure to delivers again, drop the price down below 250, and you lose all your freaking premium. They gain all that money. They short it on the way down, but they can't do it if we're not buying these fucking call options, baby. This is exactly what I predicted, you guys. In a nutshell, They create a bunch of FTDs, right? Millions and millions of FTDs. As soon as they're due T plus 35, they create a big call option event a couple weeks out. So they cover all these FTDs for the first 2 weeks coming up to this big call option event. And then they blow everybody's call options that they lured retail in to buy. But if you don't buy them, they can't do nothing because you've taken the power away from them and the incentive to price fix, drop the stock price down to blow the calls out, because if they're doing that, they're hedging. We've beat them. I'm so freaking happy right now. So for the next 2 weeks, to me personally, again, not financial advice, these next 2 weeks, it looks like Hycroft is going to run. Like I said, March 31st, 2.3 million FTDs due on May 5th. So imagine how many more FTDs that they created between $2 and $3 on the way down to that last big call options date, which was April 14th. Remember that one? April 14th had a ton of call options on Hycroft. So let's go back to that date if it'll let me. It might not pull the data up. But April 14th, there was over 111,000 calls, open interest, all the way out from everywhere from $1.50 all the way out to $7. And they blew that out and we fell. So you guys, I'm super pumped, super pumped. It's looking really good. We found a nice bottom at $1.38. If my theory is correct, these next 12 days from May 5th and on, they're either going to create slightly more FTDs or they're going to cover the period from March 35th all the way to April 14th. Those FTDs they created at that time to drop the price down. Screenshot to track the data. What do you mean screenshot to track the data? I've got everything here. Here's the FTDs. Here's where we were on March 10th at 13.2 million. They started covering them down. That's to March 29th, where our price ran to 342. And then they set up the April 14th call options to lure everybody in to buy them, right? And then retail did, and they blew all the call options out on April 14th, causing massive. That's why at 342 we started dropping in price, because after they covered those FTDs, they started shorting and they started creating new FTDs on the way down. But they had already set that bull trap for those call options on the 14th. Now they're doing it again, except this time we know. May 20th is a market maker call options bull trap to try to lure retail in. And you know what's going to happen if you don't buy them? If you own raw stock, we're going to run. If we do run, you're going to get all this money. Your portfolio is going to go up with your HYMC, probably $3 to $4 range. And then they're going to try to come in and create all these new failure to delivers and short the stock again back down below 250, which our new bottom will be between 180, probably better than 180, probably $2 to 230. But they're going to do that. They're going to let it run back down with new FTDs and short interest to steal all your premiums on the May 20th call options. I'm freaking jacked, you guys. This is so predictable. And the cool thing about this is people like, oh, T plus 35 doesn't matter. It doesn't matter with AMC, because when they T plus 35 FTDs on AMC, when they cover on the AMC shares, they just short the IWM. That's why the price action doesn't go anywhere. The last time we saw the $34 run on AMC on March 29th, which was the same time Hycroft ran, it's because somebody went in and covered shares on the IWM like Melvin. And Citadel had to come back in and buy it down. So you guys, super jacked. No options May, baby. It's cross-platform. It's working. I saw a Twitter post talking about how apes ran out of money. Their liquidity's gone and they're not buying options anymore. The casino's over. No, that's not it, dude. We're just not falling for your freaking trap anymore. And to all the YouTubers that have been pushing these options on people and the idiots telling you to sell covered calls and buy calls in AMC and you're getting blown out each week, or you're selling cover calls playing into the market maker's hand, because if you sell a covered call, you hope the stock goes down. This is it, guys. This is how we're losing the battle, is through the options chain. No options May. And we have every catalyst imaginable for AMC and Highcroft and GME May through June. Big time movies, GME dividend stock split, Highcroft setting up their new milling operation and their POX processing, Eric Sprott setting up a new gold ETF. This is it, man. Y'all get on board and we're going to see some fireworks. This is huge. And I'm not surprised that Trey and Astro and these guys who've been getting your money for their paid subs and all that bullshit, I'm not surprised they were pushing this put option hedging theory not even 2 weeks ago. I don't trust anybody no more, man. Anybody that's getting money, getting paid for this? Nope. Not if you're claiming to be an ape and you've been playing the downside of AMC, that's garbage, bro. That's straight up garbage. I don't care how cool you think you are. I don't care. You don't play the downside of AMC if you're an ape. Because if you do, you're taking the money out of the hands of the other apes. Selling calls, selling covered calls is taking the money out of the hands of the other apes. Buying puts to hedge, you're doing nothing but working for downward pressure on the market. You're not going to outsmart a market maker in a hedge play. They've got billions of dollars in multi-million-dollar algos that want you to do this. No options made, baby. I can't wait to see these next 2 weeks. I can't wait to see some price movement on the upside, and I can't wait to see May 20th when they try to blow these call options out because they think retail is going to buy them up. If anything, them loading up, the market makers and the institutions loading up the call options on the 20th, if we don't buy in and they don't have any money to steal, that might cause your gamma right there. The institutions might cause the gamma that's going to put them in the freaking dirt. So anyways, you guys have a good night, man. I'm super jacked. Can't wait to see the market the next 2 weeks, see what goes on. I'm feeling really good. Like I said, this is just my opinion, not financial advice. Don't be going out and betting the farm on what I'm saying. My channel is my opinion, and I'm just sharing information. I'm not making any predictions for you to put your money on. You do what you can afford. Play safe. Play smart. If anything, the only advice I do say to this day is no options may. Go see Doctor Strange, buy some popcorn, check out GameStop, buy the product. We're the investor and the consumer. We can't lose. Stay strong, guys. Froggy Stonks out.